We'll speak about this in the session today. But for now, we are in the middle of the C period. The market is 23,815. The B and A have done what they did, and the C has come back to V without an extension. Right? Lots to trade for still today, and there are lots and lots of important developments happening. Lots and lots of important developments happening. Lots of things to talk about, especially in terms of where the market is positioned and where are expected to do and expected to do before the end of March comes in, and we go into that series of April. Right. First and foremost, there have been some questions coming in about what we are looking to do from a larger time frame perspective, and we'll address that very very quickly. But for all practical purposes, as derivatives traders, I have this saying and I'll repeat it again and again because we need to align on this. As derivative traders, we cannot be people who live too much into the future, and we cannot be people who are living in the past. And I'll repeat that again because it's important. As derivatives traders, we are not people who live too much into the future, and we are definitely not people who live in the past. We have to live in the current moment. And the current moment is what is on your screen at the moment. And the faster we reconcile to what is happening in the now, the faster we reconcile to what is happening in the present moment, the better we become as traders. Right? What a lot of traders do is they basically think too much into the future. They are talking about what can happen for the rest of the year 2025. They are talking about what can happen for the rest of the year 2026. They are talking about what happened in 2022, 2020, 21, 2014, 2008. They are living too much into the past, and that does not help us as derivative traders. As derivative traders, we have to be focused on the now, on the present moment, on what is happening in the moment. And because this is information which is leveraged data, this is information which is powered by a multiple of 75, like your Nifty Futures, for example, that is powered 75 times more than a typical stock which you would buy, let's say a Reliance or an SPI or something. And because of this higher leverage, you cannot be living too much into the future. You cannot be talking in terms of what the market will be doing in November, December, when you need to be focused on what is happening in the month which is trading, which is the contract which is open, which is the CD which is open. So as a golden rule, and I've been saying this again and again, when we talk in terms of derivatives and we talk of ourselves as derivatives traders, we are focused on the current contract, which is the March future. And our bias, our view is valid as long as that current contract is open. When the series changes, the view changes, the bias changes, right? So simply put, what will happen in April, I don't know what kind of volumes come in over the next 2 or 3 days, and then the volumes are going to dictate price action. And by volumes, I mean rollovers. Rollovers are traded quantities which are carried from one series to the next series, and there's never a guarantee that all the traded contracts go on to the next month's contract. In fact, the ratio is always about 55 to 65% only. Right? So the remaining 30-35%, they are open to changing their biases. They're open to changing their views in the market. And because it is 55 to 65, and because it is not 100%, we cannot carry the same bias between series. So we were short in February, we went long in March, right? We have been long in March, does not mean we'll be long in April. When April comes, we'll take a review about all that has happened, and we'll make a fresh bias and we'll approach the series of April differently. I want you to understand that this is because of the kind of traded volumes which are there, and traded volumes are the movers of price action over here. Right? So this is where we are. We'll focus exactly on what is happening in the month of March futures. But for those of you who ask me, what is a longer term perspective, I'll just spend a minute talking about the larger market profile chart over here, and we'll focus our attention on the Nifty. Just quickly, I wanted you to understand where we are in terms of the positioning of the market out over here. Just go to a market profile chart. So if you look at where this is and draw up the larger year, the 1 year contract. Okay, we spoke about this earlier in the month of Jan also. So this is that important level, which was the POC of the entire year, where the largest trading concentration of volume was. So this region for me is around that 24,150, 24,100, 200 zone. Right? This is the larger view for the month of for the year 2025. And we did speak about the year of 2025 as being a consolidated profile which has to fill in this zone. Right? Now, this is valid as long as this market stays below this 24,200 zone. I'm still expecting rotations and a fill up over here. So we went back, tested this HVN lower over here, and I did expect the test of that June lows over here, but that did not happen. But now we are testing out over here. And as a long only stock buyer, or somebody who wants to hold stocks for 6 months, for 12 months or 2 years, you got to pay attention to this Nifty spot profile, because this is the cash market, right? And you got to be careful over here as the market stands at 24,200, because this is what is the supply zone for the year 2025. And till the market convincingly trades above 24,200, the structure of the market is not in favor of buyers. This is the longer cycle, and I want you to be a little bit careful to understand this, because this is a play between time frames. I'm still looking at the entire 2025 as a consolidating profile, as a market which is going to be within the highs and lows of the entire year of 2024. And I feel this is going to be the supply zone. Hence, that focus on 24,000, 24,200. The market is expected to meet responsive supply, responsive sellers over at this zone, and come over here and start operating out over here, right? So overall, that view about 2025 being a consolidating profile still is there, despite what is happening in the month of March. I am not in a position to change my view unless the market proves me wrong and does a strong move about 24 in April or May, which is going to be similar to what we have seen in the month of March, right? If that happens, we change our view, we change our bias, and we have to stay above the profile of March, the entire month of March, and put off initiative buying over here, and that will force a lot of short covering also to happen. And then the market can think about going further up ahead to that 27,000 odd level. The market was talking about 26,200, I think was the all-time high. Once we get about 24,000, then we may look to cross that all-time high also. Right, but that is subject to this market doing what it has done in the month of March for the entire month of April and the month of May. If that happens, we will start doing a review of it. But for now, we will be hitting supply, we will be hitting resistance, and as a long-term buyer, you need to be careful about this view going forward. Right, so just stay focused on 24,000 for now. I've been saying this that this month of March is a little bit different how you would be looking at, say, a month of February or a month of April or a month of May. That view is still there. This is more driven by March and pressure. And for those of you who have been trading for a very long time, you all know that the month of March behaves a little bit differently, especially in the last 10 days, compared to what it does for the remaining months of the year. Right. So this is where we are. We are at really highs, and the market is hitting that POC of the entire move of 2024. And this is a zone where if you have already built longs in the month of March, you need to start thinking in terms of taking profits and not adding fresh long positions, especially with the market around 23,900 or 24,000, because the risk reward over here is not worth it. Right? So we will review this when this series is over, and we'll take a look at it in terms of what this market is expected to do later in the month of April. We'll take it still a month at a time, and we'll see there are trading opportunities for us around that. This is where we are. And we spoke yesterday. Let me just, in fact, bring spot chart back, daily profile, and we spoke yesterday about the low of that low yesterday around 23,440. When we were doing the session, I think it was about the B period 23,440. It was the A period early in the morning around 9:30, 9:45. I had specifically asked all of you to pay careful attention to this 23,440, because this was the profile high of the weekly which happened. And the market came here, tested this, found those buyers, and has gone up. And it has done the same this morning also, has found buyers and has gone up. Right? So all this is still important. Currently, we are in that in-between phase between the DP, etc. And the market, has now, decided to stay at VWAP and VPOP. This is an entire move which has been imbalanced from Friday. Right, not just yesterday. It's a move which is imbalanced from Friday. In fact, from Thursday, 12:30 afternoon, that settlement afternoon, when that big move started happening. This has been a big, largish imbalance. So you, as market profile traders, know that now the market needs to start thinking in terms of balance, right? So the spot is around that 750 mark, and we should be looking forward to a consolidation happening later today and some of tomorrow, and then take a fresh view again for Thursday. Right? So this is where we are in terms of structure. Right? Now the question is, is this a failed auction? Absolutely not, right? Because the C period is come within the B period. For a failed auction, you've got to see a move above the initial balance high, which is the high of this BTPO, and then okay, you have to okay come back okay into the initial balance. That is not happened. So this is not a failed auction type at all. Right. So I just need to quickly add over here for all of you to make a full understanding about what we are doing. You will have to okay, get going into the training library. The training library is where the theory is, where the concepts is, where the process is, and it is like as traders okay, you got to know okay your concepts and your theory like the back of your hand. You got to recognize your own hand, right? You got to know okay what you are working with, what you are trading with. And the better okay you get at these concepts, this role of initiative buyers, the role of an 80%, the role of a responsive buyer, the role of a 10 bar call, the power of the IV3 or an IV30 signal. You got to okay understand that completely as a process, as a something okay which is second nature to you. It's a habit which comes to you naturally. And the faster okay you get to that, the more is gonna be your understanding of this market, about the way to trade this market, and how you're gonna get better. And that's gonna give you the clarity. And clarity is a superpower in the markets of today. The more clearer you are, the better is gonna be the kind of trading which you're gonna be doing. Right. So as an example, I was looking at Nifty April futures earlier this morning, right at the open, and if you guys all recollect, okay, I was looking at it at early in the morning in terms of puts, right? So this put okay, caught my attention. April contract. This is, and this was IV3 which came in right at about 9:18 a.m. Right, and the volume in the April contract is a lot more lower than the volume in the March contract. So this is still a 1:2 ratio. So there are contrasting signals over here. IS over here, no IS in the March contract. Right, but what really happened? Okay, let me do a two window mode over here and put the March one over here. So as this IS was coming in, this is the same four candles over here. You will note okay that the March contract was completely green. So this okay was contradicting what was happening over here with the initiative selling. But my process told me that because okay there was an IS in place, we had to okay, take a put, right? And this was activated okay to be honest, but because okay, of the dilemma around the rollover point, this basically okay we started looking at it in terms of the PE, and the PE was not active. There was a 24,000 PEB also same time, but it did not okay activate it. Now this is okay a knowledge of the process, and what I was trying to do over here is following the rules okay which we understand. Now, fortunately okay there was an IB which came in which cancelled okay this IS bar. That's the rule of the process. The IB cancelled the IS and the IS cancels the IB. But when the second IB came, it was a complete long trade, and we had no option but to think in terms of longs over here. Remember, IB3 itself is a strong signal. A move above the IB3 is a valid signal, but when an IB2 plus IB comes in, and that two comes in two consecutive bars, you have no option but to take a long trade. Now, this is what I say an understanding of a process. And then there was the third IB came in, so three IBs in about 4 bars. Where else can you see this kind of a setup? So if this is showing up, this is telling you again and again okay, that this market is long. This is the process we follow. Then another IB comes in, and then another IB comes in. This did not really get activated. This one, the fifth IB. But if you are seeing a market which is being dominated by such IBs, this is an example of you knowing your process, understanding that process, and trading okay that process for a long CE. Right? There isn't a lot of miracle or magic okay required over here. It's just an understanding of the way okay they are going to be working okay with that process out over here. Right? So this as long as okay this process is there, as long as okay you understand okay what is going on and you know how to read your chart, these kind of trading opportunities okay would be coming more often to you. Right? Now remember, in the markets we trade out of, not everything which happens in the market is linear or a 1:1. Right? So you cannot think in terms of the returns from the market in terms of something like getting a salary from a job. Right? It's not the fixed same package which can come to you every single day, every single week, every single month. The market is different on different days of the week, and some trades are better than other trades, and sometimes okay, the returns from the market can be very, very different day on day, week on week, month on month also. Right? So you've got to be okay alive okay to that possibility that not every single setup will have the same kind of quality. But when a single setup like what we had this morning okay comes about, which I believe in my books is a very high quality setup, you've got to be in a position okay to understand it and take advantage of it. And the faster okay you can take advantage of these kind of setups okay which are coming your way, the more okay will be your the kind of returns you're going to be making from the market. Right? And it all begins from you knowing what your process is, what your clarity is, what information you're looking at, and how you can capitalize on that information going forward. Right now, going forward, what we are looking for is we are into the D period, and the market now is gone quiet, and the C period is between A and B, and the D period is so far within C. So what I'm looking for now, because this market has been imbalanced for about 4 sessions, I'm looking for signs or a return to balance. So the rule of market profile is from an imbalance comes a balance, and from a balance flows an imbalance. So we are looking for a balance, and what is the right place for the market to balance? It's always the VWAP and VPOC of the profile. So currently the VWAP and the VPOC is aligned over here, is together, and this is a very good position or area for the market to start thinking in terms of balance, right? So this is now dipping, and it's come back below VWAP. If it dips further, look to see if there are responsive buyers coming in and trade for a move back to VWAP. Because the range is already over 200 points, which is above ATR, the bulk of the trending move looks to be done for now. For today, right? I'm still looking at this market going to about 24,000 by Thursday or Friday by the end of the week. But that remains to be traded tomorrow. For now, look for the market to start putting in a balance. The bank Nifty looks like it's already there. The Nifty is a little bit odd over here because it is just traded. It's not held that VWAP as expected to after the A and B. So that's just a little bit of caution. Some of that late long is getting trapped out over here. Right, so this is also happening. The futures in April are showing red. So this if it continues showing red through the rest of today, and the 10 bar is not really that big. So it is telling me that most of this green is in the March contract, and not all of it is getting rolled into April. If it continues being red for the rest of today and tomorrow, it ties up with what we think about 24,000 as a supply zone for the month of April. Right, so just be alive to the kind of rollovers we are seeing. See what is happening in the April contract, and just check this call against this call. And there's a mismatch, a large mismatch happening between the two. That would tell you that the rollover is not going long into April. Right. So this is where we are, 23,733 in the Nifty March contract. And Bank Nifty is a little bit more keener over there. What I don't like about the Nifty from a buy perspective is the inability to hold VWAP. So that's bringing it back up to that day low, which was around that 23,680 zone. We'll see if it tests over there and gets buyers again for us to get back into the long side again. Right. So there's a lot to trade for still, guys. There's a lot to trade for still later in the afternoon. Just be open to the possibilities of the market. As usual, we will be looking for a dip to get back into the market and a long buy. That is subject to responsive buyers coming in and with candles showing up. You do not want to trade longs without an IB3 in either the futures or the long call contracts, right? So when that happens, take the trade on the long side. And if that does not happen and there's a lot of initiative selling coming in, know that there could be some change also happening. So be alive to all kinds of possibilities. Learn to read data, and we'll take it as it is coming through. Right. So I'll sign off for now. There's an IS3 forming in the Nifty Futures. So that means we're going to be testing below the day. Let's see what happens over here when the initiative responsive buyers come back into the market. Right. I'll sign off for now, and I'll join you in the text chat in a bit over here.